let's get into it, guys. Now I'm going to talk to you guys about the USO and what happened with oil. So listen up, because this is not that it's a complex topic, but it's a topic that not many people understand properly. And if you've ever heard the saying, know what you own, it's like a super old school saying on Wall Street that is know what you own. When you're a portfolio manager and you hold, 40 different positions, know what you own. And with USO, it's something that you guys really need to understand. Everybody's asking me, like, how can oil be negative? How could a physical commodity actually go negative? What happened with oil yesterday was the May futures contracts for crude oil just completely imploded. The reason why those contracts imploded is because if you are buying those contracts and you hold them through its expiration, you are saying that you're prepared to take physical delivery of oil. Now, what's going on in the markets right now is that oil production did not slow as demand for oil slowed. The entire world economy has come to a complete standstill. Planes are not flying, cruise ships are not sailing, people are not driving their cars, construction sites are not operating. Nobody needs oil. But the oil producers continue to pull oil out of the ground. That led to a complete backlog and oversupply of oil in the markets. So you have all of this physical crude oil and nobody to buy it. So what happens is the people that have this crude oil start to store it in storage facilities. The storage for oil is 100% spoken for in the United States. That's a problem because now you don't have any more people that necessarily want to take that delivery of oil on those May contracts. I'm explaining this to you guys in a way because I want you to understand the process, okay? So there were no buyers of those May contracts. It got to a point where you would basically have to pay someone to take the oil off your hands because it cost you more money to store the oil than you can actually sell it for. So people would basically say, it's like if you came to me, normally a normal transaction would be, hey, I have a barrel of oil. Would you like some? You're like, yeah, sure. I'm like, here's the oil. You owe me $50. Great. Thanks. We completed our transaction. That's a normal oil transaction. What's going on now is, hey, I have this barrel of oil, and the buyer's like, I don't want it. I have nowhere to put it. And you're like, well, no, but I want to sell it to you. And the buyer's like, well, I don't want it. No one wants to buy it from me. I have nowhere to put it. And then you get desperate and say, listen, I'll give you $20. Just take the damn oil off my hands. That's what happened yesterday. When the oil contracts went negative yesterday, that's essentially what that meant. Was that it cost people more money to store oil than it did to actually sell it. And those contracts completely blew up. There were no buyers for those May contracts. That's why it went to negative $40 a barrel at one point. That's a paper loss on a vehicle, a financial vehicle that is the oil futures market. Now, while that happened, while the May contracts went to negative $40, negative $30 a barrel, the June, July, August, October, December, those were all trading much, much higher, okay? Those were at 18, 26, $33 a barrel the further out that you go. This brings me to the USO and something called contango. A lot of people have asked me, should I buy the USO? And a lot of people have already told me, hey, Mike, I bought USO yesterday. I bought USO. And I'm like, no. They're like, oil has gotten crushed. I think the price of oil is going to recover. I'm buying the USO. if you want to take advantage of oil rebounding, the USO is not the right vehicle. The USO does not track the spot price of crude oil. And this is where what I mean by know what you own. The USO is a retail investor death trap. It is a retail investor death trap. It is where you will go to lose money over an extended period of time. And let me explain to you why. What the USO is an ETF that buys front month futures contracts for oil. Front month meaning the very next month. And every time when those contracts come up to expiration, they roll those contracts forward to the next month. That is what the USO does. It's in their investment strategy. It's in the business plan. It's in the investment prospectus. It's in all of it. All you got to do is look up the USO's investment prospectus, and it will tell you that is their investment strategy. That is what they do. This causes a problem for retail investors because the USO is really meant for a hedge for larger institutions. Retail investors that just hold on to the USO are going to lose money over time because of contango. What is contango? Contango is when the futures contract of an asset is trading higher than the actual spot price of the asset itself. So let's say oil was selling for $10 a barrel, but the front month futures contract is $18 a barrel. That's contango. The futures contract is worth more than the physical asset. Now, if you're the USO and you have to constantly roll forward those contracts, every time you roll forward, the price of the asset is higher. So if you look at the June, do it right now or do it tomorrow. Look at the June WTI crude contracts. Look at the July. Look at October. Look at December. They're going to be more expensive the further out that you go. So if, as the USO, if every time they roll those contracts forward, meaning the USO buys those contracts, they're paying a premium for those contracts. Oil itself is trading lower than what the USO is paying for the futures contract. That's contango. Fancy word, but I just explained to you what it means. That is why the USO is not the right vehicle if you think the price of oil is going to rebound. Because the contango that we are experiencing in the oil markets right now is unlike anything that I've ever seen before. Okay, you have oil trading at zero, and then you have, or negative, but then you have a futures contract at $18. The spread between these contracts is massive. You're talking about, yesterday, the May contracts were negative $30 a barrel, and the very next front month of June was 18. So you're talking negative 40, negative 30, but June's were $14, $16 a barrel. That contango spread is why the USO is crashing. That's why the USO is not a good asset for you guys to buy and hold long term, because they constantly roll those contracts forward. Now, important to note, the USO came out with an announcement today that helps them. They changed their investment prospectus. Now, what the USO was yesterday is no longer. The USO has changed. The USO was usually just buying those front month contracts. Now, the USO can buy and sell any month contract that they want. They've changed the investment strategy. This will help them because if they were holding, prior to this move, the USO was holding 30% of all the June contracts for crude oil. If those June contracts blew up, just like the May contracts blew up, USO would have gone to zero. So by the USO changing their investment strategy and saying, you know what, we can hedge now, we can also buy July and August contracts. We don't just have to buy the next months. That will reduce some of their risk because they don't hold as large of a position on the front month contract, which has the chance to blow up just like the May contracts blew up. It helps them. I'm not saying USO can't go lower. It definitely could. But this investment move by them to change things does help them, but it doesn't just completely make all the problems go away. This may have been a little bit of an advanced lesson that if you're a new novice trader, you may not have fully understood what I said. I tried to break it down as simple, okay, and in a way that you guys can understand. Does anybody have any questions about what I just said in explaining the USO, explaining contango, and explaining the futures contracts for oil? Does that stuff make sense, or do you guys have any questions that you want me to clarify before I move forward? Okay, yeah, I'll do contango one more time. I'll go over contango one more time, guys. A lot of you just asked me to go over contango again. So contango is, so when you have commodities, right? You have gold, you've got oil, you've got natural gas, you've got corn, you've got a lot of different types of commodities. Specifically, we're talking about crude, but contango is with any commodity. When you have a futures contract that is trading higher than the spot price of the commodity itself. So let's say oil is right now, let's say oil was trading at $1 a barrel. Okay? It's not. But let's say oil was, all right, let's say $10. Let's say oil's trading at $10 a barrel right now. Let's say that's the spot price of oil. If someone wanted to sell a barrel of oil right now, they'd get $10 for it. Let's say that was the case. But if you went to buy the front month futures contract for oil, and you had to pay $16 for that contract. Well, you're paying $16 for a contract of oil for June. But right now, on April 21st, oil's not at $16. That spread is contango. And when you have ETFs like the USO that roll their contracts forward, meaning when they own the June contracts, they exit the June contracts and buy the July contracts. They exit the July contracts, they buy the August contracts. They exit the August contracts, they buy, and they just keep rolling forward. They are buying across that contango. Or they're buying across that spread. And then that deterioration of money and value is called contango. Okay? Does that clarify things a little bit better? I want to make sure you guys understand this because it's an important aspect to learn. Yes, Dennis, exactly. Exactly, Dennis. And then backwardation is the opposite of contango. When the futures contract is trading less than the current price. So backwardation would be if you can sell oil today for $26 a barrel, but the June contracts were trading at $18 a barrel. That would be backwardation, which is the opposite of contango. Yes, I'll explain. So can you explain the difference between a spot and future contract? A spot price is what is the price of the commodity right now. Right now in the real world, if we were buying and selling pens and I said to you, okay, I'm going to give you this pen. What is the price that you're going to pay for it? That's the spot price of this pen. Then there's futures contracts that where you might say, well, this might be worth $10 right now, but in June, I think it's going to be worth 14. And the futures contract will be trading at 14. That's a futures contract. Okay, so you're buying a contract for a future delivery of this pen. That's the difference between a futures contract and a spot price. Tito, I'll help you make 4K for a fishing boat, bro, only if you take me fishing. I'll do it, Tito. I'll help you make $4,000, bro. Sign up to TTG, and I'll help make you more than $4,000, and then we'll go fishing together. I mean, well, guys, you can probably get through it in about 2 weeks, Chris. Grand. So USO. So now, what USO Grand says, can USO ever short oil futures? USO, as part of their investment prospectus, has to buy the futures contracts. USO is supposed to track as closely as possible the futures price of oil. But when this contango spreads get real out of whack, it fails to do that. And because those spreads are so out of whack now, it struggles. So with their new ability to buy and sell whatever contracts they want, they now have more freedom to hedge different things and take and take risk off on certain contracts, add to other contracts, bet against other month contracts. They have the ability to change things now with their a new announcement that they made today at around 2:30. Okay, so that has changed now with what the USO can do, which is why I'm saying this is a good thing for them that they can do this, but they still do need to buy the futures contracts. So even if they're hedging their positions and spreading things out, they still have to buy those front month contracts. And if those contracts blow up like the May contracts, the USO will struggle again. It will take another hit, but it won't necessarily go to zero, which what could have happened had they not changed their investment strategy. Yes, contango happens all the time, Victor. Contango is a constant thing in a lot of these ETFs that buy futures contracts. Contango is a constant thing. I don't know, Sanjiv. Honestly, I saw that today. Somebody bought like 75,000 put options in BP ahead of their earnings. So someone's taking a big bet against BP to maybe tank after earnings. Yes, the new USO rule, it could help them not go. It can help USO not go to zero. Okay, because now if they can buy further out contracts, there's because eventually, guys, the economy is going to open back up, and there's going to be a demand for oil again. Okay, and it's going to be very soon. It's going to be very soon. It's going to be within the next month. You're going to start to see demand for oil start to pick back up again. So, the July, the August, those future contracts for oil will be fine. It's the May and June contracts that you have a bit of a fundamental problem with. If you guys are already long USO, I wish you asked me. I wish you would have asked me sooner. I've told everyone that asked me over the last couple of days if they should buy USO. I told everybody to stay away from it, and a lot of people kept asking me these questions. That's why I actually decided to do this live stream and talk about this, because a lot of people were misinformed, and I don't like to see people losing money because they don't necessarily know what they're doing.
You could blame Robinhood for that. I think it was the most traded stock on Robinhood.
It was, and that just shows you the retail investor has been piling money into USO. It's a death trap for retail investors. It's a complete death trap because of that contango.
Yeah. All right, let's move on from that.
Okay, yeah, let's move on from oil. So guys, I hope that helps. I hope this helps answer a lot of your questions. I hope this made sense to you on USO and oil. I hope you have a better understanding of what the USO actually is. XRP Gal, I actually like Chevron better than Exxon. I like Chevron better than Exxon.
Yeah, Exxon has